Jerry Abrahams. Commissioner Dahm. Phil DeFranco.
Here.
Timothy Hodges. Catherine McKinnon.
Here.
Commissioner Perez. Franklin Perry. Chelsea Ross.
Here.
Sarah Sanders.
Here.
We have a quorum in attendance for the meeting.
Very good. Go
Has
ahead.
got on. This is George.
Thank you, Commissioner. We'll note that.
So we have a relatively light agenda today. Just we have a resolution for the upcoming bond sale and some reports. Before we started, I just wanted to put out a special thanks. We had the investor conference on Tuesday of this week, and I want to thank Executive Director Nandini, our Board Chair Sela, and DECD Commissioner Alexander Dahm for all presenting on a affordable housing and economic development panel, and also Barbara Feldman from Bank of America, housing banker, was the moderator. I want to thank them for being part of that presentation. And several people from the board attended. Jerry Abrahams, Tim Hodges attended the reception the night before. Commissioner Perez joined us. And then we also had some members of the CHFA staff attend as well. And CHFA had a booth. So I just want to say one of the things I enjoyed the most about putting on the conference was working with our partners. We had sponsors from Connecticut Airport Authority, MDC, and the Connecticut Green Bank. So it was a real success, and I just want to thank CHFA for being part of it. And it was fun.
Oh, absolutely.
Okay.
Okay, thank you for giving us the opportunity to highlight about affordable housing.
Yes, and several bankers were there, housing bankers, I should say, which was good. So with that, I'll turn over to Hazim for our first item, resolution for the next bond sale.
Thank you, Sarah. Like Sarah mentioned, for finance and audit, we do have one action item, which is to present the next single family bond resolution. So the resolution before the committee and eventually the board this morning will be to authorize CHFA to issue up to 150 million of the housing mortgage finance program bonds. The sale will allow CHFA to raise additional 150 million of lendable proceeds for the first-time homebuyer program. As of May 19, CHFA had an aggregate net pipeline of about 130 million. CHFA will utilize a fixed-rate bond structure and expects to close around August. Citigroup is assigned as the book running manager for the bond, and I'll be happy to answer any questions relating to the resolution.
I have a quick question. There's nobody else. Hasim, we're definitely not going to be doing this the next 30 days or so, right?
Yeah, we're definitely not. So there's a lot of volatility in the market.
I agree. That's why I'm saying that, because
Yeah.
we're going to be nuts to go to the market in the next week or two.
Oh, yeah. Yeah, we plan to price after Independence Day.
And what happens if we're still having a debt ceiling situation, which hopefully we won't, but meaning if they push it down a couple months?
It will be a monetary policy nightmare and catastrophe.
Okay, I understand that part. I mean, what happens to your suggestion that we go to the market? Do you delay it? Do you make a judgment call? We'll cross that bridge when we get there.
Probably, right. It's probably going to be a judgment call. I think, again, we're chartering into the unknown. And one of the unknowns, of course, is the fact that, we have a pipeline. We have the resources to deal with the pipeline. However, if the market freezes up, it's not just going to be us, it's also the lending community. So I don't even know how the sector would behave. Setting aside housing is just the whole concept about liquidity and how.
Exactly, that's what I mean. I mean, this is more of stuff that we can't control, except that you could choose to jump into a fire, or you could wait until the firemen show up and turn off the fire, right?
Yeah. No, we don't have the Kevlar suit to jump into a fire, so we will not jump into a fire.
Okay, and that may not be a great analogy, but my only concern is that that at some point, we may want to delay it, if depending on what's going on nationally, right? And hopefully
Yeah.
they'll figure this out,
Yeah, absolutely. So for the benefit of the committee, I just want to point out, so I printed out this report yesterday. It was actually yesterday afternoon. So everybody knows that when it comes to investment of securities, one of the vehicle that you would look at would be the Treasury T-bill, which is anything, 1 year or shorter guaranteed by the federal government. Due to the increase by the Fed fund is currently supposed to be between 5 and 5.25, and the 1 month T-bill yesterday afternoon was around 5.55%, but the 1 week T-bill that matures on June 1 was trading at 6.74%, which was more than 1% higher than the 1 month, and that was at 12:32 p.m. And by 2:25 p.m., the 1 week jumped to about 7.3%. So you can see that there's a lot of volatility, and folks are very worried about what's going to happen within the first week of June. And if the 1 week is trading in excess of 7%, you can imagine what's going to happen to the rest of the duration, the industry.
Yeah, and especially after Standard & Poor's put the U.S. credit on the watch.
Right.
Which they expect that the other rating agencies would do the same unless something positive doesn't happen in the next day or two.
Right. And just like what
Okay.
we heard during the our Connecticut conference, we do wish that the outcome from the Connecticut budget can somehow be transferred over to the at the federal level. Hopefully they can figure things out and then come to a resolution.
May I have a motion?
I move.
I'll second it.
Any other questions? Roll call vote, please.
Jerry Abrahams, Commissioner Dahm, Commissioner, I can see your mouth saying yes, but I couldn't hear you, so I think we can record that as a as a yes. Phil DeFranzo,
Yes.
Tim Hodges.
Aye.
Thank you. Catherine McKinnon,
Aye.
Commissioner Perez,
Yes.
Franklin Perry, Chelsea Ross,
Yes.
Sarah Sanders.
Yes.
The vote passes unanimously.
Okay, our next item is financial reports. Hazim.
Thank you. So I'll be presenting for Allison. She's at the GFOA conference. So for the end of April, and mortgage loan and investment interest revenue are coming in 3.2 million above budget, and the year-over-year revenue variance basically driven by higher returns from the authorities' short-term investment. While we enjoyed higher returns from investment, we did experience higher interest expense, some due to higher payable as CHFA has issued more bonds this year over last year, and some are due to the unhedged variable rate debt. Administrative expenses coming in 2.7 million below budget and 532,000 higher than the prior year, excluding salaries and benefits. Current year-to-date expenses are 124,000 lower than the prior year's admin expenses. Now, I do want to note, when it comes to the actual year-over-year comparison on our administrative expenses, using a 2022 proxy is somewhat skewed just because the fact that in 2023, we are seeing higher demand for our products, and then we are doing more things this year compared to last year. So Lorraine, can you go to the next 2 pages? The last one, I should say. Okay. So if committee can take a look at this, you know, at least under the professional services, the one that I would like to highlight is on home ownership counseling fees. So we expect this expense will continue to rise for 2023. And this is actually good because this fee covers for homebuyer education and anything related to the expansion of the first-time homebuyer program. And then the next one is under facility and information system, where year over year, we are seeing more than 33% higher. And that's due to the upgrades that we are pursuing for our building along with our information system. So overall, currently the change in that position is above target by 3.1 million. And I'll be happy to answer any questions relating to our financial reports through the end of April.
I had a question, Hazim, about the variable rate bonds.
Yes.
How much of a risk is that? And is there a cap on what, you know, on where the interest rates can go on those, or?
Yes, yes. So whenever that we issue variable rate bonds, we generally will enter into a derivative contract to hedge against the rise in interest rate. So Sarah did ask in the past about our swap position, and currently our variable rate position, the unhedged portion, I should say, is only about 12% of the total bond payables. So the way that you should look at this is, yes, we do have exposure in regards to the rising interest rate, but there is that corresponding offset where we are also benefiting from the rise in our investment income.
Mm-hmm.
So the idea would be, as long as you are prudently managing your unhedged exposure, you will have you are able to cancel that exposure through the rise of the revenue side.
Okay. Thank you.
Any other questions? Let's go on to the delinquency report with John Chilson.
Good morning. For the month of April, the authority purchased 149 loans totaling $33.8 million, of which 127 loans totaling $28.4 million were securitized, or 85% of April's volume. The remaining 22 loans totaling $5.4 million for whole loans. The average loan size for April was $227,000. The mortgage-backed security portfolio balance at the end of April was $2.3 billion, which was an increase of $16.7 million over the prior month. Our whole loan portfolio through March declined by 22 loans, but the total principal balance increased by $255,000 net for a total of $1.1 billion. And the carrying, our overall delinquency rate for our single family portfolio declined again month over month, 24 basis points this past month to 1.64%. And the carrying balance of loans in foreclosure year over year declined by $14.2 million to $16 million. And the number of loans in foreclosure declined year over year by 115 loans. For the month of April, authority also funded 138 down payment assistance loans totaling $2.1 million, with the average loan size being $15,300. Approximately 93% of the April borrowers took advantage of the DAP program. In the same month, the authority also funded 103 time to own forgivable loans, and that totaled $2.9 million, and that average loan balance was $28,000. There were 2 multifamily new loan closings for them in April, which increased the total number of loans in our multifamily portfolio to 563, with a portfolio balance of $1.33 billion. For Permanent loan delinquencies increased by one permanent loan to a total of 7 loans, and there was one ongoing construction loan delinquency. And the overall delinquency rate for our multifamily portfolio was 1.24%. Any questions?
I had a question. In terms of the mortgages, is there an expectation? It seems like there are more and more down payment programs available. Is there an expectation that there'll be a higher delinquency rate, sort of as a result of sort of less owner equity going into a deal?
Possibly. There is
You
a
anticipate?
correlation. Yeah, there is a correlation with higher delinquency rates on loans that have either a low amount of down payment and or have an assistance of a DAP loan. Historically, our DAP loans, our loans with a DAP have a slightly higher decrease on delinquency rate than those without a DAP. But with the time to own loans, I think there's a lot of incentive, again, with the average forgivable loan being $28,000 forgiven over 10 years. I think there's a lot of incentive to keep that mortgage current and not to lose that home.
It's true. Okay.
Can we move up to the top of this report? I just want to see the name of it. I always feel like it's a misnomer. This is really more of a production and delinquency report. It's about how many loans you've closed, and then we talk about delinquency, but we call it delinquency report. Is there any way we could call it like maybe production and delinquency report going forward? Is that okay?
No, that's fine. I mean, I think that this report has evolved over the years, and the attempt and intent was just to provide that while it's important to look at the performance of the portfolio, is also there's also a relationship in terms of origination, because
Okay,
have a
origination.
declining balance, then the ratio looks worse because you don't have any offset of anything that's coming in. But yeah, we can think
Yeah,
of it.
I just feel like it's a misnomer. I mean, because of the origination information is often more interesting than the delinquency. Okay, any other questions for John? Our last item today is approval of the minutes of the Finance and Audit Committee from April 27th. Can I have a motion?
I move.
Second? Thank you. And a roll call vote.
Of course. Jerry Abrahams, Commissioner Dawn.
Yes.
Thank you. Phil DeFranco,
Yes.
Timothy Hodges,
Aye.
Catherine McKinnon,
Aye.
Commissioner Perez,
Yes.
Franklin Perry, Chelsea Ross,
Yes.
Sarah Sanders.
Yes.
The vote passes unanimously.
Very good. Well, we have some great stretch of weather coming for our Memorial Day weekend. I hope everyone enjoys their time. And any other matters to bring up? Okay, with that, I'd like a vote to adjourn. Everyone who agrees, say aye. Aye.
Aye.
Okay, we have a little break till the board meeting. Thank
Thank
you,
you.
everyone.
Thank you.
All right. Thanks. Bye.
Thank you.
Aye.